Facebook, good morning. I think we're there. Think we are good. Hope the sound is all right. We're going to go with this new mic setup. It worked well last time. So, good morning, good morning, good morning. What are we going to talk about today? Now, this is one that has been on the radar for a little bit for me, and it might end up being a two-parter because this has a lot of ramifications in terms of how traders focus and what traders focus on depending on the result that the trade is getting. So today we're going to talk about luck, and primarily what we're going to talk about is, does luck exist in trading? And the idea, the kind of focus is luck being like buses. So the whole idea of luck throws up for me initially two questions. The two questions that it throws up is, does luck exist in trading? Simple yes or no answer. Do you believe it? And guys, can you hear me? Is there sound coming through? Have I got sound? Have I got sound? Someone's saying they can't hear me. Can you hear me? Just give me a thumbs up or a like if you have got sound. Thumbs up or a like. Cool. So, luck in trading. Does it exist? And another one is, thanks for likes. So yeah, does luck exist? And if it does, how do you quote unquote get better or more lucky when it comes to being a trading? Now, the first thing I want to talk about in terms of luck is that the challenge with luck, or the problem with using luck or wanting to be lucky or feeling like you are unlucky, is what you are essentially doing initially is putting the blame outside yourself. So you've all probably heard the phrase, you make your own luck. So just give me a like, give me a thumbs up, give me a yes if that's something you've heard. It's a phrase you've heard for years. You make your own luck. And positive people, people who are in a can-do mindset outside of trading, will be of that idea that you make your own luck. Well, I've got a better quote. It's one I heard probably only about 2 weeks ago, which is, luck is like buses. They come along all the time, but you've got to have the fare to get on, which I thought was a really, really good way of thinking about it. Luck is like buses, but you've got to have the fare to be able to get on and go where you want to go. So what does that mean? How does that relate to trading? Well, the number one thing is, often what I will get told by somebody who is not getting the results they want is, I was a bit unlucky on this trade. I was a bit unlucky with a position I was in on, US dollar, Canadian dollar. So what happens is people will often phrase an element of unluckiness and base it around a trade. So it'll either be something that's happened to them recently, or it will be one trade that they talk about instead of their whole process. So I'll give you an example. I was unlucky when I traded long US dollar Swiss franc back when the Swiss franc unpegged themselves from the euro. I had no way of knowing that was going to happen. I was long, and as soon as it happened, the market tanked short. And in one trade, even though I was only risking 1% of my account on that trade, I actually lost 5%. I got requoted at the end of the day. There are a lot of people a lot worse off than me, but I could say, well, I was unlucky on that one trade. The challenge is, a lot of traders, what they're doing is they're not managing their risk correctly and they're over leveraged. So when they have one trade or an unlucky situation, it is often causing them more pain than it should do. So they see themselves as unlucky, or they say, I've been unlucky in my trading. They're focusing on one trade, they're thinking short term, and then as a result, they change strategy, they change approach, they stop trading. Because one of the things that I see, if you want to relate unlucky, because we'll talk about luck in a minute, but if you want to think about unlucky, I see a lot of traders being on the wrong side of the market. So what I mean by that is, take a trader that comes along and they start trading, they trade a strategy for 2 months, the strategy is not giving them the performance they either want or they expect, so they change strategies or they stop trading. And very often they stop trading right at the point that the strategy kicks in, because the challenge is they've looked at the results over a year or over 5 years, and it says, look, the strategy averages, let's say, 50% a year, every year for the last 5 years. The average is 50% a year. It dips up and down, but then they think or expect that they're going to make the equivalent of that divided by, I don't know, 3 or 4. So in a 2 or 3 month period, they're going to make 15%, or they're going to make at least 10%. And over that 2 months, they come along and they only make 3%, or they have a losing couple of months. So what they think is the strategy doesn't work, or they are unlucky, or they've come in and they've started trading it at the wrong time. So then as a result, they stop trading it. And then for the next 2 months, the strategy average is 20% per month, month on month, and they recoup the average. They then see those results, get pissed off, get back into the strategy, and then the strategy has one losing month, still levels out around the average. They've had 3 losing months. They say, oh, I'm just unlucky, I can't get on the right side of the market. And what they do is they then quit again, and then the strategy has a steady run for the rest of the year. So essentially what happens is they see themselves as unlucky, but essentially what they've done is they've not paid the fare to get on the bus. They've not stuck around. So very often in trading, the fare that you're paying is very simply sticking around through the bad times of a strategy, or the less profitable periods, or the quiet periods, to be ready for the good times. To give you an example of this, our monthly position-based strategy is running at nearly 30% for the year and 75% for the last 3 years. So that strategy is running well. Now it's running well over the last 3 years, but if you started trading that at the start of this year, you'd be on the best winning run that it's had for the last 3 years. So an element of it is timing. So people say to me, does luck exist in trading? I wouldn't say, I think luck exists in everything, but the people that make the most luck or profit or capitalize from lucky situations are the ones that cope with the unlucky situations and are the most consistent. If you want to be the one that picks up the big winners, you want to be the one that is able to know when your strategy is offering you the potential for a big winning run, and 3 times out of 6 you capitalize on that, then you've got to be around consistently. Often the most unlucky traders, for want of a better expression, are the ones that I've just said dip in and out and don't show consistency. So does luck exist in trading? Yes. Do unlucky situations happen? Yes. But how do you make more luck? Well, number one, you need to be more consistent. Number two, you need to have a better understanding of what it is you trade. Because a lot of traders want to come along and they see Kerry in our trading room and she makes a 15 to 1 on one trade, and they want that, or they see her as lucky, but that's nothing to do with luck. They haven't seen the 3 trades that she's tried to run for 15 to 1 and she's only banked a 2 to 1 or a 1 for 1 or a 3 for 1, or the trades she's tried to run that have reached 10 for 1 and then drop back and she only ends up banking 5 to 1. So they don't see the ups and downs. They don't see how many times she or me or Martin, whoever it is, has paid the fare to get on the lucky bus. So there is a lot of opportunities to profit and what can seem from an external point of view as something that is luck. But if you're always around, you're willing to pay the price, you're willing to pay the fare, you will get those scenarios. So I think the other thing to think about primarily is a word that you can associate around luck with trading is timing, which is what I was saying about the unlucky trader. What I think I'll do on another video, if you guys want me to, is I'll do a video where I show some of the data from a couple of our strategies and show the difference between starting at one point versus starting at another point, and actually give you some stats behind it. Because a lot of traders come in with a positive expectation that because they've learnt a strategy, because they've taken the time to diligently test what they're doing, that the market should immediately, as a result of that hard work and that effort, the market should immediately reward them. And then when it doesn't, they perceive themselves as unlucky, or they perceive themselves, I think that could be an even more detrimental issue, is they perceive themselves as somebody that has got something wrong, or it must be me, it must be my skill, when in a lot of cases it actually comes down to timing. So if you were to think of one word, I'd rather maybe move the word luck aside and think about the word timing, because with timing what you can do is you can't control when you start trading. You can start trading and hit a winning run. You can start trading and hit a losing run. So the idea is, if you see that timing is something that is essentially from when you start out of your control, and the time that you choose to place a trade, if you're following your rules, you can't control the result of that. But what you can control is the process that goes on behind it. And Martin, one of our traders, has a great phrase, and he will say that think of every trade as more data. So regardless of whether the trade wins or loses, think of every trade as more data. And what's so useful about that, and what's so empowering about that, is the more data you build up, the more that you can see how your strategy ebbs and flows, positive periods, quiet periods, losing periods, then you're more likely to get a balanced perspective of what you're doing. So does luck in trading exist? Can you become more lucky? Yes, in a way you can become more lucky. Certainly if you're willing to stick around and be more consistent. The traders that are in and out of the market tend to be the ones that are perceived, or they perceive themselves as being less lucky. But actually, you are in control way more than you think. Hope that was useful, guys. I will do another video. It might not be this week, but I'll definitely do another video where I talk more about timing and how to gain some perspective around timing, and the fact that if you get your timing right, great. But if you don't get your timing right in terms of the short-term result, how you can cope with it, get some perspective, and maintain a consistency in your process. Good. Hope that was useful. I'll catch up with you again soon.